Welcome everyone, it's the Crypto Lark. Very excited to have on today Bobby from Coin Gecko, one of my favorite websites to go and check out the price of Bitcoin or any other cryptocurrencies. There's a link down below if you guys want to check it out. Bobby, how are you going?
I'm doing great. How about you, Lark?
Doing very good, doing very good. Now, CoinGecko has been doing a lot of interesting stuff recently, and I want to really just jump into one of our big conversation points today, which is going to be about volume and the fake volume problem, something we've talked a lot about here on the show. We're not going to be just talking about that today. We're also going to be talking about IEO trends, market trends, and kind of the trends happening in Asia. So stick around for all of those great topics, guys. Now, you guys have recently implemented a trust score. So can you kind of break down, I guess, the fake volume problem and also why you decided to work on this trust score?
Sure. So one of the reasons why we work on the trust score is because what we notice is that the 24 hours reported volume from exchanges in the crypto space is no longer a good measure of exchanges liquidity. So in the traditional markets, volume from exchanges is a good indicator of how liquid an exchange is. So higher volume will indicate an exchange has higher liquidity, and lower volume will indicate the exchange has lower liquidity. In the crypto market, however, the incentive to cheat is very high. It's not a regulated space, so anybody can just cheat and appear as the exchange. All these exchanges cheat because they want to have the crown of the exchange with the highest trading volume in the world. They want to be that exchange.
It's like kids, isn't it? It's crazy.
Yeah.
I want to be number one.
I want to be number one, exactly. With the idea that they can sell this idea that they're the biggest exchange in the world, and then hopefully some people believe that they are the real exchange in the world and create accounts and actually trade there. So it comes to a stage where if you look at the total reported trading volume for exchanges, like we would expect Binance to be the most liquid exchange because it has the most traffic. But when we look into it, Binance will actually rank number 13 at one point. And then the number 1 to number 12 was this exchanges doing all kinds of, let's just say, not so, you might say, questionable techniques, either doing wash trading or they embark on trans fee mining to encourage trading among bots, among people to rack up trading fees to get the exchange tokens. So what we did was we think that, okay, it comes to a stage where this 24 hours reported volume is no longer useful. We need to look at other metrics beyond reported trading volume to get a good indicator of exchanges liquidity. Therefore, on the 13th of May, last Monday, we made announcements during Consensus in New York City on the first day of Consensus that we are introducing Trust Score to combat fake exchange volume. So some of the metrics that we implemented in this first iteration of Trust Score is the use of web traffic estimates from similar web, and also we are looking at the order book data. So there are basically two parts to the Trust Score. One is the exchange ranking, the overall total exchange volume on the exchange overview page on CoinGecko. So that makes use of the web traffic analysis. And the other part where actually most of the exchanges are gaming things really aggressively is the coin pages. So on the coin pages, we have a list of exchange trading those coins. And now if you look at CoinGecko, we have 3 other metrics on CoinGecko, which is the bid-ask spread, the cost of capital required to move the order book up by 2% and down by 2%. And based on this metric, we give a trust score and categorize them into 3 different colors, like green, yellow, and red. So green for sort of good, yellow, medium, and red for like really bad stuff. So let me give you an analogy of some of the metrics, some of the surprising results that we found. So when we did this calculation, we saw for one of the Litecoin exchanges, this exchange is supposedly the 3rd most liquid exchange. It has a daily trading volume of over $100 million. You will expect that with $100 million in daily trading volume, it's fairly easy to buy and sell your Litecoin. But what we saw was the bid-ask spread that was showing up on our screen was 89%. So yeah, you heard me right.
That's
89%.
Crazy.
Yeah. When we saw that, okay, there must be something wrong on our side. We must have done the calculation wrongly because it can't be possible that it's 89%. And then if you look at the order book, we thought that the cost of capital to move it by 2% was $100. I was like, okay, wait a minute. So if I spend $100 if I trade there, like it moves the order book by 2%, like this can't be right. And so we decided to check on the exchange itself and look at the order book and trade history and say, okay, this is crazy. Like this is wash trading happening live right in front of our eyes.
Wow.
The best bid and best ask has like an extra 0 between them. So that was pretty crazy stuff. So yeah, that's for the bid ask spread. So and the order book depth. Yeah, I mean, I don't know if I explained the order book depth clearly enough to you, like what it means by 2%.
It makes sense to me. It's a crazy thing when you look at it. I mean, obviously, yeah, you should require more than $100 to be able to move an order book by 2%. I mean, if you throw $100 into Binance, it's just like throwing $100 into the wind. There it goes. I mean, you get crypto in exchange for it, but it doesn't have any effect on the market, right? I mean, even for Binance's most illiquid pairings, the ones that only have 20 Bitcoin a day or something like that, well, it's a different situation. Whereas there are definitely some exchanges. I mean, every once in a while, I have to go off into the depths of the exchange world in order to pick something up, right? Or to sell something that is not listed on the major exchanges. And you really realize that problem of liquidity when you go to these places. And it can be surprising when you get there and you say, hey, wait a second, aren't you guys like the 5th most popular exchange or something? Why am I having liquidity problems here?
Exactly. So we think that this trust score is just this order book and web traffic is just first step in our iteration of making a more robust trust score. We think that we need to have a more comprehensive overview of an exchange liquidity. Some of the metrics that we plan to put forward in the coming months would be to look at the trade history analysis to basically see how much trades are happening between the bid and ask spread, whether it's happening in microseconds or so, to determine whether, usually if the bid and ask spread is large and there's a lot of trades happening within microseconds, these are usually indicative of wash trades. We also want to take a look, one of the things that we'll be evaluating is the API quality. So if you are an exchange with nothing to hide, you probably have all the data that is happening in your exchange and you make it available to everyone to query as much as they want without rate limit and WebSocket connection. Because, hey, there's nothing to hide. But if you're exchange doing some sort of shady stuff, like you probably want to rate limit, hide some of the data, don't allow aggregators like us to query as much as you can, because obviously you don't want us finding too much information. We're going to give some sort of ABC rating or something like that for all its APIs. We also want to take a look at cybersecurity analysis. So kind of like talk to exchanges, ask them to disclose when was the last time you did a pen test, for example, and who was your vendor. And you might be surprised, I've spoke to some exchanges and then to get their idea if they're keen to disclose this information. And they say like, hey, we don't do third-party audits, we do everything in-house. Which makes you question like, how do you audit yourself? Like, how do you know what you did not cover?
That's the equivalent of letting the fox look after the chickens, right?
Exactly. And I think one thing is interesting as well is we are going to look into the amount of crypto that an exchange has in their wallet. So we're going to look at their hot and cold wallet or their cold wallet analysis. So basically, you can think about your on-chain analysis. You dust the addresses that these exchanges have, and then sort of see where the money go and get an estimate of how much Bitcoin, Ether, and that this exchange has. The idea that if you are a large exchange that claim to have, like, let's say, $2 billion in daily trading volume, surely you must have a lot of customers, users, and a lot of deposits in your balances, in your wallets. But if you have a large trading volume, but only a small deposit, that means something just doesn't add up. Like you're probably doing something fishy or shady at the back. We're going to probably take a look at some of the social media analysis, take a look at how many followers that this exchange has, and also look at some of the user reviews and let users put in reviews of the exchange. And also probably put in a more prominent position, like some sort of a licensing, what sort of license in which jurisdiction, what a license number that this exchange has. So these are some of the things that we think will make it better and give the user more information on exchange. At the end of the day, it's kind of a cat and mouse game. Whatever that gets measured gets manipulated to some extent.
Can only imagine.
The only thing that we can really do is to try to make it harder for the exchanges to game these things and increase the cost of cheating, if you want to put it that way.
Yeah, I can imagine that between CoinGecko and, of course, I know CoinMarketCap has been working on a similar kind of initiative, not the same, but a similar kind of initiative. You guys are making a lot of friends and a lot of enemies at the same time, because essentially all the exchanges that are, you know, working transparently, and we've got exchanges like, you know, Binance and Coinbase, that they're pretty well proven to be straight up on their volume, right? Where you have other exchanges that are going to be like, CoinGecko, they're doing it again. But of course, it's better to have those guys not being your friends, and of course, have the community trusting that we can go to CoinGecko and get a reliable source of information, which is so important in the crypto game, because there's so much misinformation, there's so much manipulation of the numbers and things going around, that it's super important to have these trust scores, or, you know, at least your websites like CoinGecko working harder and harder and harder to try and get reliable information out to people.
Yeah, I mean, one of the main reasons we did it was because we kept getting so many emails from people trying to complaining to us that, hey, you said this exchange has like the best liquidity, but when I tried to go to this exchange to trade, like I put in order and I couldn't get my orders matched. Like all these trades they have, like all these things that the exchange reporting is fake. So we thought like, okay, this is too much. Like we don't want to handle all these things anymore. I mean, and from our point of view as a user as well, we don't want to be misled by exchanges. So we want to do what is right for the users, and the users only really care about which exchange has like the highest liquidity. So we want to do what is best for the users. So this is what we did. So far, I mean, what caught us by surprise was how, even though we only look at order book and web traffic, it could sort of tell very easily which exchange has the better liquidity. But of course, I don't expect this to stay long because exchanges will find ways to manipulate the metric. But I mean, it's good. Order book data is probably easier to manipulate, but the web traffic data, it's going to be harder to manipulate, because they have to we are relying on a third party like using SimilarWeb to get an estimate. It's interesting because it's funny how we saw some exchanges having like insane amount of trading volume, $2-3 billion a day. But when we look at their traffic that they get, it's tiny. Like
50 people a day. Like, man, you got 50 really big whales coming in there. That's amazing, guys.
So what we had to do is we had to take some sort of average of the top exchanges using Bitwise, 10 exchanges, and then we count the medium average daily user trading volume, and then compare it against all the other exchanges. If the numbers are really high, we normalize them and then sort of display it to the user. At least now, if you go to CoinGecko, we see like Binance is the exchange with the #1 trading volume, followed by Coinbase Pro, Bitfinex, Kraken, which kind of makes sense. Before this was all sort of transient mining exchanges. It's like makes you really wonder, oh, these guys are all kids, but I want the #1 crown.
Yeah, that's it. It's definitely problematic. Now, I want to move the conversation on to the process of actually listing coins on the website, because as we know, there are scams or very scam-like projects that come out. So what is the process that the CoinGecko team actually goes through in terms of when you're looking at, you know, someone writes in and say, hey, can you list my coin on your website?
Yeah, sure. So at the moment, we have a Google form that you can find on CoinGecko. The footer is called a request form. So if there's a coin that is traded on any exchange that we track, just fill out the form and we'll do some checks, and then more or less we will list it up. So at the moment, we have one of the most comprehensive database. We track over 4,600 coins at this point in time, and we are plugged into over 300 exchanges. Basically, any coin that you can sort of imagine being traded out there in the market is most likely listed on CoinGecko. As for scams, it's a tough question to navigate, I would say. If you want to say what is scam and what is not scam in this industry, is quite tough, because what can be scam, what may sound like a scam at the start may turn out to be legitimate at the end.
Yeah. And if you listen to the Bitcoin maximalists, the 4,664 coins that you've listed that are not Bitcoin are all scams.
Exactly. I always like to give an example of Tron. It started out like plagiarizing the entire white paper and all, but the team moved on and then made a lot of changes, and now they are one of the biggest smart contract platform out there. I mean, still very questionable techniques, but I guess.
Yeah, you know, it's always the funny thing I like to say about Justin Sun. You know, love him or hate him, the guy is a master marketer. No matter what I do, every day when I come to social media, someone's talking about Justin Sun.
Exactly. I was just gonna say exactly the same thing as you did. He's a master marketer, like he or hate it. Like he's really good at like building hype, I would say. And because of that, like I mean, Tron has gone. He have gone a lot of. I mean, it's gone pretty big. I mean, never thought he would go this big, I would say.
Yeah, that's like what, number 10 or 11 on most days in terms.
Exactly.
It's massive.
Yeah. But if we do find scam coins, like for example, it's been flagged by any financial regulators in the world, you know, we take a proactive action to remove them. Yep.
Nice. Now, I want to get your thought on the IEO trend that we're seeing happening right now. Do you think the IEO trend is an overall positive for the crypto space? And as a second question, you guys list ICOs on Coingecko. You have a list of upcoming ICOs. And a lot of those, of course, are not going to do an IEO. They're going to just do their ICO on their website or whatever it might be. So what do you think the future is of... So, two questions. Thoughts on the IEO trend, and what is the future of any ICOs that are not doing an IEO? Do you think that they're all going to have to go to that at some point?
Sure. So everyone thought that the IEO trend is like something new that started out in 2019, but the fact is IEO has been around since last year. I think the IEO trend really started in February or late January, if you may, but with Binance Launchpad launch of BitTorrent. So I think two things. So one is Binance Launchpad chose a really hype up project, which is BitTorrent, which is again Justin Sun's project by Tron. So they're really good at marketing. And then the second thing is it was sold out within seconds. And then there was a huge 10x price increase in the token price. So I think for most people, we went through 2018 with like pretty much every month last year was a negative month. Like people had 80-90% loss, and everyone's losing interest in the space. Everyone's really depressed with the crypto winter, and then like saying that there's no way anybody can make 10x return in ICOs at all. And then bam, here comes Justin Sun and BitTorrent and Binance, and boom, you have 10x return again. And then everyone suddenly woke up and said, hey, this crypto winter is over, like crypto spring is here. And then, okay, if people thought that is a one-off thing, then Binance did the second IEO, which is
I think it was Fetch.
Fetch. And then which did something similar, was sold out in seconds, and then again had a 7x pump or so, I remember. And then they repeated it again with Seller, and then same thing, same pattern repeated. And then everybody said, okay, now's the trend. Like crypto spring is here, like IEO is here to stay. And then all the exchanges got FOMO. They say, okay, we all have to get into IEO ASAP, and all these guys started going around hunting projects to get to do IEO. So the questions whether this IEO will stay on for the long haul or not. To be honest, I'm not very bullish on it. I think it's a short-term play. I think the IEO trend has certainly made its mark. It's certainly brought us into the crypto spring that we are in right now. I mean, Bitcoin price was trading below about $3,000 for a long time, and then now it's up to $8,000. And IEO definitely had something to do with making interest come back into the space. But the reason why I'm not bullish IEO will stay on for a long time is because everyone's got this same mentality that you should just buy an IEO without thinking. It doesn't matter what IEO, just buy it because you're almost guaranteed to make money. And when everybody is thinking the same way, like it just can't go on forever. It's sort of like the ICO trend where everybody says, let's just buy an ICO because it's a sure, easy way to make money. But when everybody starts thinking that, you get lower and lower quality projects doing ICO, and then like it's not sustainable for this to go on. Everybody makes money. So at some point, the music stops. But IEO, I would say that things accelerate at a faster rate. And as exchanges go around hungry to find projects, the quality of projects that are available will definitely go lower and lower. And we have definitely seen some examples, like Bittrex trying to do something similar. They had like a big boo-boo for a start for the IEO. They did not. They chose, I think, Raid. Raid was like a scammy project that they had to cancel the IEO at the start. But I think if I remember correctly, Ocean Protocol, I think, had a massive dump right after their IEO. So
that's right. There's certainly no guaranteed returns without a doubt. And the IEO trend has been good. And we've actually seen a lot of big projects that were kind of started last year and did private sales last year, and then they delayed their public sales because of the market conditions. And a lot of really exciting projects are coming now. But there's the exciting projects, but then, like you said, we have so many IEO platforms who are all competing for that same business. We're going to have really questionable projects starting to come on, ones that aren't going to provide returns to investors, ones that are, you know, not the best. And it's just, they're motivated by money to get the IEOs on so that they get all this trading going on. The due diligence, you hope it happens. Binance has been doing really well with their due diligence. Hopefully they continue that. They continue to be an industry leader, but you never know. Always do your own due diligence, guys.
Exactly. So I don't know how true this is, but I've heard from people who wants to conduct IEOs that the exchanges are telling projects that it's no longer IEOs are not a it's not a way for you to raise money in the industry, but it's more of a marketing channel because exchanges themselves are not confident of raising money. But what they say is, if you want to do an IEO, you have to sort of prepare enough money to pump the token 5 times the price to weight investors' appetite, so that it's sort of manipulated so that issuers themselves provide enough money to the exchange, who then probably get a market maker or something like that to move the price 5x, and then it's subsequently dump after that. I have no proof about this. I'm just hearing news in the market that these are things that exchanges are doing to get returns for investors, so that it kind of make a good headlines and all.
Would not be surprised. I mean, it's one of those situations that if this is the rumor you're hearing, there's probably at least some grain of truth to that, at least on some exchanges, so you can all listen to that information and make your own conclusions about it without a doubt. So I guess the second part of the question then, do you think that we will see the more traditional ICOs where you have a website and you go through all the stuff, will that still continue to be quite relevant, do you think, as time goes on?
I think it's just hard to raise money in the ICO market these days. Those who are doing the traditional route, in my opinion, a lot of these guys who did IEO, those that tried doing ICO from last year, couldn't raise enough money, and then therefore doing IEO. This is the chance to do an IEO to raise money. Otherwise, you miss the boat.
That's it. Do it now or you're missing out.
Exactly. I don't know. I mean, I guess if you're strong enough, good enough, with a strong team, like good idea, strong team, like you can still probably do it, race your way. I know there's some projects that are still doing it, but it's just going to be challenging, I would say. Yeah.
Well, it's like you said, the actual IEO is more of a marketing event anyway, and it's good for investors potentially, but yeah. Anyway, I want to now move on to getting your thoughts about kind of the key trends that you see happening right now in the Asian market. So you're based in Malaysia, and Southeast Asia is continually brought forward as being one of the really big regions that we see up and coming in the crypto space, because we have so many places that are just absolutely booming in terms of positive regulation, adoption, all these different things. I mean, the Philippines is a massive market. Thailand's been making a lot of really positive steps forward. Singapore, of course, is half the world's crypto companies are probably registered in Singapore. So can you share, what are you seeing as the key trends right now that are happening in the Southeast Asian market?
Sure. So I think Southeast Asian market is very interesting. If I remember correctly, there's like close to 500 million people living in Southeast Asia or so. So of course the majority is in Indonesia. So in the Southeast Asian crypto space, or Singapore is the hub for all crypto companies. A lot of crypto companies are incorporated in Singapore. The government is very open to having fintech and crypto companies in the country there. But the trouble with Singapore is a lot of people are struggling to get a bank account there. The banks are not so open in that sense. And if you look at Southeast Asia, the regulators are actually very open. The Thai regulators have already approved exchange licenses for crypto companies, for Bitcoin exchanges. So there are few, I think if I remember, 3 regulated crypto exchanges in Thailand where people can easily buy and sell in Thailand. The same is happening for Malaysia. The government has announced regulations to regulate crypto exchanges. They have asked these guys to come in and apply for licenses. It's just a matter of time before they release the license, announce the license holders, probably in the next couple of months or so. And they're also taking steps to regulate ICOs in Malaysia.
Oh, that's great, because I know about a year or so ago the situation wasn't looking very good for Malaysia, where it seemed like, oh, they might come down really, really hard on cryptocurrency. So this is actually really positive.
Exactly. So, I mean, they've classified all cryptocurrencies as securities, but I think it's just a technicality. But what it means, but now they are actually regulating, they're allowing people to open exchanges. Then once you have exchanges, regulated exchanges, you can easily buy and sell without going through peer-to-peer OTC players and all, which helps consumers and all to a larger extent. I think ICO in Thailand, I remember they were looking to do some sort of STO regulations as well. Talking to them, it's just a matter of time before they implement it too. Philippines, of course, we know a lot of guys working hard on there, trying to help the unbanked. And I think if I remember, over 90% of people in Philippines do not have bank accounts. Some of the OGs from the Bitcoin days involved in crypto remittance, Bitcoin remittance from the early days. Rabbit.ph, a lot of guys doing things. And in fact, one of the largest exchanges, Coins.ph, was bought by a large ride-sharing company from Indonesia called Gojek.
Oh, yeah, I remember when
Yeah, so it's the Uber for Indonesia. They bought an exchange in Philippines. So that will be interesting now that the ride-sharing company has a stake in the Philippines exchange. So, I mean, they haven't done much about it yet. I think they acquired mainly for the e-money license that this company hold in Philippines. But it probably indicates that if they want to go into crypto, they have the technical expertise with a team of people in Philippines to expand regionally in Southeast Asia. So it will be really interesting to see how things pan out.
Yeah, it's such an interesting region, and I absolutely love any chance I ever get to Southeast Asia, and it's so dynamic, and there's so much innovation happening, and it's really, really exciting, and it's great to see that we are seeing a lot of really positive regulation coming out of there, where, you know, Singapore's got its little things with banking and stuff like that, but overall we see a bigger picture where a lot of good things are happening, and that's great because we need positive regulation. If we're going to have regulation, let it be positive, damn it.
Yeah. Well, yeah, forgot to mention, one of the biggest stars in the region as well is Vietnam.
Oh, of course, yeah.
They have a huge amount of technical talent, which are very hungry to grow. And they have some really interesting projects like Kyber Network and Thermo Chain coming out from Vietnam. So yeah, that sort of rounds up. And Indonesia, of course, there's a few companies, exchanges, and projects. But yeah, that's Southeast Asia in general.
Yeah, Kyber Network's probably one of the it's so easy to use, it's ridiculous.
Exactly.
If anyone, I mean, I made a tutorial about it, I've talked about it a lot of times, but if anyone hasn't heard about Kyber Network yet, gosh, you gotta go check it out, because it's just like the easiest way possible to do exchanges for any Ethereum based tokens. It's just like, you're done. It's great. So
I agree.
Yeah, it's amazing to see these teams coming out of there, and yeah, innovation is great, and it's so great to see it's not just centered in the US or centered in Western Europe. It's an absolute global movement, crypto, and it's awesome to see the potential for the technology and also all the innovators all around the world who are building amazing applications and blockchains to move us all into that, you know, connected crypto future.
Well, as they call it, it's permissionless innovation. You are free to innovate anywhere in the world. You don't have to be in San Francisco or New York.
That's it.
We're things.
Breaking down the barriers, man. It's very exciting.
Exactly.
Awesome, Bobby. This has been a super fun chat. Thank you so much for taking some time out of your day to come over here and tell us about, you know, what Coingecko is doing to help fight the fake volume problem, and of course a bit about the IEOs and what's happening in Asia. So thank you so much.
My pleasure. We're happy to be on the show.
Thank you.